Most people think that finding the next big startup is about having a crystal ball or insider connections, but what if it's just about having the right system? If you've got capital saved up and you don't know where to start, or you've made a few bets and you want a consistent system to find trending startups to invest in, this is your playbook. Today, I'm going to show you how to consistently find promising startups, filter out the noise, and spot the ones with real momentum. And the biggest problem is that a lot of the best deals happen quietly, through trusted networks, building relationships. That stuff takes time. On the other hand, our strategy has two phases: online methods to find and validate startups using data, then offline tactics that help you build relationships and actually get deals. So method one is using a startup directory. Everyone checks startup directories, and almost everybody uses them wrong. You filter by most funding or most employees, and end up looking at the same obvious, well-known companies that everybody already knows. The real signal is not how much money they've raised, it's whether or not real people are actually searching for them. If a brand's search volume is growing consistently on Google, that's direct evidence of organic demand. Customers are seeking them out, not just responding to ads. That's why we built a startup directory around this. It ranks startups by historical search volume, and you can even adjust the time frame window, say 3 months, 5 years, even 15 years. And the results update instantly to show you the growth over that period of time. Once you spot a brand with a good upward curve, then you can layer in other filters. Things like funding round, employee count, founded date, location. You're using data to guide your curiosity and not the other way around. When you click onto a promising startup, you'll see detailed metrics. If you want to save it for later, you just hit track topic, add it to a project inside your Exploding Topics account, and these projects make it really easy to keep track of everything that you found. Scroll down and you're also going to see related trending startups and topics, plus a channel breakdown showing which social platforms the brand is most popular on. And that breakdown tells you exactly where to go do more of your research. Method 2 is to start with meta trends and then drill down. Even an amazing team with the perfect product will struggle in a dying market. But an average team in a skyrocketing category, they can win big. So start one level higher, at the trend level. Find a meta trend that's gaining massive traction, something like AI-powered design or consumer health wearables. Then drill down to find the brands that are actually riding that wave. You get the context of why a market is growing. And that makes evaluating any company within it way easier. We have a meta trends feature that does exactly this. It shows you a big, growing category, then lists all the related micro trends and brands underneath. Even if those specific brands aren't raising capital, they're still your North Star. Find their competitors, look for alternatives. Here's a concrete example. A quick search shows that Hoppler is an alternative to Find Help. To check its growth status, type the name into Trend Analysis. This shows you the historical Google search volume for that brand query, so you can see if it's actually trending upwards. You've just identified a cluster of companies all solving the same rising customer pain point, and your job just got simpler. Method 3 is searching for growing brands by industry. Not every winner is a sexy new category. Some of the best investments are in boring, massive markets. They just serve a specific customer perfectly. Think a SaaS tool for freelance accountants, or a supplement for postmenopausal athletes. These companies are often going to fly under the radar. They're not splashing on big Super Bowl ads. They're dominating a niche through word of mouth. To find them, you can use the Trending Topics feature. Pick a broad category that you're curious about, and we have tons of categories like fintech, beauty, you name it. Then filter specifically for brands, so you're only viewing trending brands within that category. You're not looking for generic topics. You're looking for specific company names that are popping. Click onto one. See what other related topics customers are searching for. Look at what social platforms they're trending on. This tells you where to go listen to real customer conversations. And just like that, you can hit track topic and add it to a project to keep watching it. Now, method 4 is your own desk, which is a beginner's goldmine. This is the most underrated method, and it costs you nothing but attention. If you're just starting out in this area, this is your move. First, look at your own life. What software, product, or service would you genuinely be upset to lose? What tool makes your life noticeably better? Your personal experience is a powerful data point. If it solves a painful problem for you, I'm sure it does for others. Then make a list. Validate it by entering the company's name into the trend analysis tool in Exploding Topics to confirm its growth trajectory. Is demand growing? If the data backs up your personal experience, you've got a compelling candidate. Now reach out, not as an investor, but as a passionate user. Give feedback, start a conversation. This is how you build genuine relationships from a position of strength. Method 5 is to leverage the platforms. You don't have to source every single deal yourself. Platforms like AngelList allow accredited investors to access curated startup deals and syndicates. The big benefit? You can invest alongside experienced lead investors who have already done the heavy lifting, the due diligence. For example, their venture funds option lets you invest alongside some of the top VC firms. You can invest in rolling funds, where you invest alongside individual venture capitalists. You subscribe quarterly and adjust your investments over time. This is about diversification and learning from the actual players. If you're not an accredited investor, platforms like Start Engine, previously called Seed Invest, open up equity crowdfunding. Check sizes can be much smaller, letting you build a diversified portfolio of early-stage bets with less capital. Method 6 is the hackathon front row. These are intense 48-hour building competitions where new startup ideas get stress tested in real time. Most projects probably won't go on to become huge, but you'll get experienced teams. The ones with technical chops, speed, and a cool head under pressure. The goal here isn't necessarily immediate investment, it's more about building a network. Some of today's giants, like Zapier, were created through this method. Method 7, accelerator demo days. Accelerators like Y Combinator, Techstars, and 500 Startups are startup boot camps. Their end-of-year program, Demo Days, are where graduates pitch to a room full of investors. Y Combinator's Demo Day is an invite-only day, but there are plenty of other regional and niche ones that are open to anybody. This is a fire hose of early, vetted companies, and it's probably the most efficient way to see a high volume of early-stage startups in a single afternoon. Method 8 is the mentorship bridge. It's a classic win-win strategy. Offer your genuine mentorship for early-stage founders. By advising them, you get an insider view of their operation, decision-making, and their resilience. So you're evaluating them over the long term before they've even got a pitch deck. You can start this process by looking through university entrepreneurship programs, local incubators, or online platforms like MicroMentor. Build a reputation as a helpful advisor first. Then all the investment opportunities will follow. Method 9 is the conference power move. Networking events, industry conferences are obvious, but most people are doing them wrong. They show up, collect business cards, and leave. Don't do that. Research the attendee list in advance. Identify 10 to 15 companies or founders that you want to talk to. Reach out beforehand with a specific reason for connecting. At the event, focus on quality over quantity. Have a few deep conversations. Then you can host your own small, curated event. Invite a few interesting founders, people like that over for dinner. When you curate this guest list, you become the hub. You provide all this value by facilitating these connections, and you position yourself as a central node within the network. Method 10 is the community commitment. Think long-term. Join a dedicated community or a mastermind full of founders and investors. Groups like Dynamite Circle or On Deck are built on trusted ongoing relationships. The key here is consistent contribution. Answer questions in the forum, make introductions, share your resources. Your reputation within that community becomes your currency. Over time, you become the trusted person that people are going to bring deals to. This is where the highest quality, most referral-based opportunities are found. Overall, the goal today is not to tell you what to invest in, it's to show you how to see what others are missing. The most interesting companies out there are not going to find you, so go find them. And if you want more tricks and tips, what products to sell, startups to invest in, industries that are blowing up, make sure to hit subscribe, and I'll see you in the next video.